Every dividend tells a story, and July had a pretty interesting story to tell. The market wasn't exactly kind this month, and some sectors pulled back hard. Volatility returned, and once again, investors started asking the same question: can my portfolio actually handle a market like this? Well, instead of guessing, let's look at what really happened. Today I'm going to show you exactly how much income my retirement team generated in July, which ETFs stepped up when conditions got tough, and whether anyone on the team failed to do the job they were hired to do. Because remember, every ETF has a job, every job has a purpose. So stay tuned. Welcome back to Simply Money. If you've been following this channel, you know I don't just buy ETFs, I hire them. Every investment in my portfolio has a specific responsibility. Some are responsible for growing wealth. Some are focused on increasing my future income. Others are responsible for generating the retirement paycheck I'll eventually live on. And months like July are exactly why that philosophy matters. When markets become volatile, it's easy to focus on share prices. But retirement investing isn't just about what the market is doing today. It's about whether your portfolio continues doing what you hired it to do. Did my income continue growing? Did my paycheck team keep paying? Did my growth position still have a purpose despite the pullback? That's what we're going to answer today. So let's jump into the numbers and see what story July's dividends are telling us. So we're going to be looking at a spreadsheet I use called Dividend Growth Simply Money. This was the original sheet I used. It's a much more simplistic way to track your dividends versus the new portfolio manager that I have that is much more robust. And I'll show you that one here in a little bit. But I want to show you the data from the Dividend Growth Simply Money so we can look at fund by fund and I can break it down. And this is what this sheet is great for. It really tracks each fund individually for you. One ETF surprised me this month, and another one reminded me exactly why I hired it in the first place. I'll show you both in just a minute. This month's numbers are important, but they're only one chapter in a much bigger story. The goal isn't to chase the highest dividend each month. It's to build a retirement team that continues doing its job through good markets and bad. So we're going to start here with our Dividend Growth Simply Money sheet that I was talking about a moment ago. And we're going to start with SCHD. Now, SCHD did not pay in July because it is a quarterly payer, but I want you to see it because it did do its job this month. Regardless whether it's paying each month, it's still going to pay me in September on its quarterly dividend payment, but it did its job during a drawback in the market in July. And I'm just going to skip down. If you've watched the channel, there's plenty of videos on my SCHD holding, what it's done, and I go through it sometimes really in depth. So what I want to show you is here at the end of June, you can see that the market was doing really well, and the total was at 382, 323. And that was pretty good. And the market as a whole, things like the semiconductor sector has pulled back, tech has pulled back some. In July, especially through the middle of July, it was really rough. But SCHD, as you can see currently, and this is the second day of August that I'm recording this, it is actually up $18,000. So as the other funds are down, SCHD did its job. It helps hedge in a downturn. And not only does it have that job, it also has the job of growing my income long term, which it has done. And I've demonstrated that over and over. It is not the highest paying dividend on my team, but it does grow its dividend year over year. And in July, this growth has helped hedge against some of the loss. So even though I saw my portfolio drop significantly from other funds, and when I say drop, I mean unrealized gains because I'm not selling anything. So the money looks like it's lower, but it's actually, I still have the same number of shares. In fact, I got more shares because when I got my dividends, I bought more shares and they were at a discounted price. But SCHD did its job and continued to hold up the portfolio during this downtime. And that's okay, and that's what I want it to do. It's not here for its massive growth. It's here for steady growth and steady income growth. Second one I want to show you, another surprise here for me, the CHPY holding. It has done its job. And I had some people on the channel saying, see, CHPY's dying, it's down. And people were freaking out, especially if you got into the hype and you saw, hey, it's up to $90, I'm going to get into it. And this is what people tend to do. They see something going up, and that's when they buy into it. And when it's going down, they start panicking and they sell. And we have to get the psychology, the mindset of the total opposite. When we see a solid fund coming down, that's when we want to beef up our position in it. But again, you have to know the underlying funds. You have to understand what its job is and then be confident when you're buying it. But most people go off news cycles. They go off hype. They go off the latest video. I'm showing you CHPY, and I've done some videos on it to show you what it has done. Doesn't mean that's the time to buy. You have to look into that. And I always say, do your own due diligence, because this is not financial advice. This is for informational and educational purposes only. You need to look at the data and then go and dig in it yourself and see how you feel about it and decide, is the risk and reward worth it? Because personal finances are personal, and this is what I like, and it fits my team. So just because I'm sharing something is not saying go get it. You may have a totally different purpose. You might be 25 years old. I'm 58. So we have different purposes. So we have to decide what we're doing and why we're doing it. But CHPY, although it was down significantly this month, you can see that it had got up to $90, and right now it's sitting at $67, and I'm not worried about it. I believe it's going to come back, and it is a very volatile sector, and I will see that. And as right now, I'm taking advantage of buying more shares. As you can see, I was buying 4.5 shares and then 5 shares. In end of June and into July, I was getting 6 and 5.5 shares over and over. My dividend did go down a little bit, and that is expected in these types of funds. You can see we peaked here at 77 cents per share, and right now we're at 54 cents per share. But I want to remind you, when I started this position, I was getting 40, 43 cents, 40 cents. My payments were $200. So yes, I peaked at a $511 right here, $511 distribution, but I'm still getting strong distributions and strong dividends compared to where I began. It's not about whether it's higher or lower from last month or last quarter. It's long term, and that's what I'm looking at. So what I want to jump over to now, and this is just my Simply Money dividend tracker. I don't sell this. This is just me plugging in the numbers. I like to see all my distributions. Then these are my weekly totals. So for me, it's just a quick, easy way. I just plop the numbers in. When I get a payment, July 2nd, CHPY, $447. July 2nd, QLDY, and I dropped that position. That was there for a short season for purpose, and it served its purpose, and it has now been replaced. So each day I got paid. You can see the amounts that I was getting paid. We've come down. Now, remember, July had a couple times where something like CHPY paid me 5 weeks, so I got 5 payments. That's why this is higher. Even though the payments were individually higher last month, the total monthly payment was higher because I got that extra week's pay. It's kind of like your paycheck. If you're paid weekly at work, on those 2 times a year where you get that 5th week, you get an extra paycheck, it feels like. So it depends how you budget. So for me, this was nice. I saw that, and that brought our total to $5,774 for the month. I want to come over to the cumulative. If you've been watching the channel, last year, the quarterly payments with SCHD in March, June, September were always much larger because I held a very large position there. And then last July, August, I started rotating more into the dividend, the income focus. As I'm preparing within a few years for retirement, I'm slowly making the adjustment, getting my portfolio prepared for when I do want to retire, that it'll be ready instead of having to do it at the exact moment in case we're in a really bad market. Perhaps we're in a really elevated market with some of the income generators, and I don't want to go ahead and buy them at an elevated price. This way I can kind of pick and choose, sell off what I need to when, and get my portfolio balanced and prepared, whether it takes a year or 4 or 5 years. I don't know at this point, but I'm just getting it prepared. You can see as I began making that shift, SCHD started dropping slightly. Still getting really nice payments from SCHD. If you recall, we'll go back to June. You can see SCHD for June paid $3,000. So very nice payment there. But what I've done is I've been able to continue to keep these quarterly payments very high. As you can see in June with SCHD and the other payments, instead of last June we were at $54.71, we're at $86.40. But look at these in-between months. these non-quarterly payments. This month, $57.74. We are just seeing these go up and up each month, each quarter, and I love this trajectory, and we're getting close to where we want to be, and this is why I track it like this, and this sheet is for me. This is what I use, and you can already see August. I'm giving you a sneak peek, already at $554, and we're only in the second day. And I have that plugged in because the payments will be coming on Monday. This is Sunday that I'm recording this. Now, this is what I show every month. But what I wanted to show you is this is the old form I used to use, and I still use it because I like seeing everything like I just showed you, each fund, and I can just kind of track that. I'm really kind of the nerdy, geeky guy on the spreadsheets. I enjoy them. I love looking at numbers. I like seeing them in different ways and tracking them different ways. So I want you to see the new tool that I've built. This is the Simply Money Portfolio Manager. This is a fully encompassing manager of your portfolio, and it actually builds with you. The great thing is you have a dashboard here, and this is the Simply Money Portfolio Manager that I'm showing you with my information in there from the Simply Money channel that I show you. You have the total portfolio value, you have the available cash, the annual income that it's generating based on what I've built up over the last couple months, and it'll continue to refine that as it has more and more information. 3, 4, 5 months down the road, you'll get a better average because it's taking averages. So as you get some of those fluctuations, it'll be able to average it better. It shows you your monthly average income and then your portfolio yield of 11.22. Now, if you want to purchase this is available down at Buy Me a Coffee in the description below. You can get the tool, and it's really easy to set up. You go into the portfolio builder, you put how much your starting cash is, you go ahead and put in what you currently have, because it's going to track with you as you go forward. Now, some people have asked saying, well, can we put stuff from before in? And I'll show you that in a second. I did not, because I don't want to go back 9 years, putting in every transaction I've done over 9 years. I would be here forever. That's a lot of stuff. So what I'm using it for is to track from today forward. And so what I did was I put in the information based on when I put it in. That would be my starting. So the portfolio builder is basically what do I currently have. Then you go to transactions, and then every time you make a transaction, you put it in. If you get a dividend, what account did it come from? What symbol? Now, I did go ahead and put in all my SCHD because I really wanted to track that from the beginning. And because it's only a quarterly payer, it wasn't quite as exhaustive to get all of that in. And then it shows you the number of shares that you were buying with that dividend. So again, I had the date, what account and what symbol, how many shares I received from the dividend, what the price was when I bought the dividend, and you have to manually put all this in, what the distribution share per share was, and then how much the payment was. The dividend paid me 10 cents per share, and the number of shares I had, so I had $1,438, and that's what I did. And the reinvest purchase price was $14.79. And you can go down and do all of that. Now, if maybe you've only had your portfolio for 2 or 3 months and you want to go ahead and put every transaction starting from zero, your portfolio builder, you would simply just put in all this information here, the institution account symbol, starting shares 0, because you don't have any. And there's instructions over here. There's a video linked to the description in Buy Me a Coffee with a video kind of walking you through some of this. Then what it does is it updates your portfolio. So this is where you can go. Again, you have the dashboard where you're looking at just a brief summary, but the portfolio is showing you every account, every symbol, current total shares, average cost, current price of that ticker, the market value of your shares currently, what you've gained or lost from the beginning, and your gain-loss percentage, your current yield for that ticker. A lot of information, a lot of metrics on this one. You have your annual income being produced by that ticker, the monthly income by that ticker, the retirement contribution. Because of the amount that this one is paying, you can see that it's almost 32% of my retirement contribution. The reason this is important is I don't want one fund providing too much of my income, because if that fund really crashes or does something, it could impact my retirement. And I want to make sure that I have a nice balance. And then it shows the allocation percent, how much of my portfolio is allocated to that. And this is only my income portfolio. I don't keep my growth portfolio on here. I keep that totally separate. Then I have my income versus allocation. So you can see based on that I have much smaller amount invested here, but I get a much larger amount of income. It shows my allocation of income is much higher. And then my projected distribution share looking forward. So a lot of nice information on this you can look at. And then we have the income report. And this is just another nice summary report for you to look at. It shows you your annual income, monthly income, portfolio yield, and number of income producing funds. I have 10 currently listed here. Then it ranks them from the highest paying to the lowest, and it shows you how much is in each one of those. If you come down further, there's some highlights here. Largest income producer, highest current yield, highest yield on cost, highest retirement paycheck. So you can see I need to get this one a little less reliant on there. It just took me by surprise because it took off so fast. I didn't invest the amount I have in it. I invested a small amount and it tripled on me. I will be working on getting that back down to where I want, not by selling this, but by building up some of the other funds. The income concentration is moderate, and that's showing that I don't want too much concentration. In this example, CHPY. So it's moderate. It's not too high, but this will give you some warnings like, hey, you may want to look at that. Shows you which one the income efficiency is at, and then the average portfolio yield. So that is the income report. You have a quick health check. Once you fill everything out, it's going to give you some warnings. So if you made a mistake or forgot something, it helps you figure out what it is and why it's not working. And if you have questions, and send it to me. This also helps me figure out, okay, what did you do? And people will send me emails, and I get on that and fix it as quickly as possible. But usually it's just a simple user error, and we get that fixed quickly. And then we have a history here. This will run once a month and show you where you're at. So down the road, you can look back and get an update. So if you run this, it'll only run once a month. If you've already ran it for July, it won't run every July. So July, the first time you open this in July, it will capture that, and then it'll hold it. So, 3 years down the road, you can look back and see, how have I done, whether you're growing or whether you're in retirement, and you can compare, how is it going for me? So it's a nice tool to kind of look at the history. And again, it builds with you. And that's the wonderful thing about this portfolio manager. So that's Simply Money's July update. I hope you enjoyed it. Thank you for joining me. Don't forget, every ETF has a job. Every job has a purpose. We'll see you next time on Simply Money.